everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind a couple things. One is that obviously there's risk involved with each trade that you take, so you want to make sure you manage risk in a way that makes sense for you. And we'll go over some ideas in that regard as well if we simulate a trade or two. There are actually some nice tools built into our web trader and app in the order windows that make the risk management side of things quite a bit simpler. And also keep in mind that as we go over the ideas, that it's coming from an educational perspective and not to be taken as financial advisement. Now, from our main website, we can log into the web trader platform, which has the same tools and functionalities as our app. And you can trade on both the MT4 and MT5 accounts from the same location. So if we log in the upper right-hand corner here, we'll find ourselves in the web trader platform. Now, as we get started with the talk about what's going on fundamentally, we can probably review a bit from earlier in the week. There's been some weakness in some of the data out of the US of late. A few announcements earlier in the week, particularly the housing data has been not as strong as had been hoped. And so it's showing maybe some layers of weakness in the US economy, although overall it seems the economy is doing well. If you look at Wall Street and the major indices, not just in the US but around the world, there's quite a bit of bullishness there in the equities and the major indices. So there seems to be more positivity than negativity. But the US had just enough negative data that, again, speculation that, hey, maybe there'll be a couple rate cuts in the second half of this year in the US, kind of spurred some weakness in the US dollar. And so while the equities were rising, the US dollar maybe gave back some ground a little bit, which obviously can change with different headlines, but that's kind of the direction we've been headed this week a bit, with equities rising, US dollar maybe giving some ground to other major currencies. Now, as we come into today, we've had the official beginning of the global tariffs have been put in place as of midnight US time last night, is what the Trump administration was saying yesterday. So we're looking at kind of a baseline tariff of something like 10 or 15% on countries that have struck deals with the US. So that includes all of the countries in the European Union and some others as well around the globe. But there are some major deals that have not been struck yet, and that includes China. There's some major tariffs that were put on India, which spooked Apple in particular. A lot of the iPhones and products are actually manufactured in India. And so there's been some exceptions actually made for those particular companies that are doing some production or have pledged increased production within the US. They've been given special permission with their imports not to have those big taxes that were slapped on India, for example. So we'll see that in some of the headlines and the market buzz that the tariffs are affecting things, but some companies have been exempted from those tariffs for certain products. There's the big one was 100% tariff on the import of chips that are used in computers and AI and smartphones, etc. But again, there's some exemptions there that if the chip makers, whether they're in China or Malaysia or wherever they might be, if those chip makers have already pledged to have development in the US, to build factories in the US, then again, they've been exempted or those tariffs have been lowered quite a bit. So their focus in the US is to try and force more domestic production from these companies that have been importing a lot of products to have domestic production within the US, which obviously then would create jobs while producing products within the continental US. So when we then take a look at the announcements that are coming in on the economic calendar, we'll keep that in mind. We've got that tariff situation that from midnight last night could create some tension, but particular countries and particular companies have been exempted from that. Now, as we go to the economic calendar, and you find that over here in the discovery section, if you haven't used these tools that are found in the discovery section, this is the location of the economic calendar. Now, if we go to the calendar and put on today's date, we'll see a number of announcements have already come in today. I would expect to see some weakness in the euro potentially based on the industrial production and trade balance numbers that came in today out of Germany. So we see industrial production. The last reading was 1.2% increase, which is pretty solid. Then there's an expected slowdown month over month to be a decrease in industrial production of negative 0.8, and it actually more than doubled that decrease and came in at negative 1.9%, which is quite a drastic turnaround from an increase of 1.2% month over month to a decrease of almost 2% on industrial production out of Germany. That being the major economy, one of the major economies in the European Union, certainly will affect potentially the movements of the Euro JPY, Euro USD, etc. Now, on top of that, trade balance, while still positive, near 15 billion positive trade balance, it's much less than what it was the prior revised reading that came in, 18.5 billion. So the expectation was a slowdown to dip below 18 billion to 17.9, and it actually dipped all the way down to 14.9 billion as the trade balance surplus. So I think the U.S. would love to have that type of number, to have such a trade surplus, which I think is what they're aiming to do with all of these tariffs. But for the European Union, yes, it's positive, but it's much less positive than was anticipated. So that's two pretty negative numbers there out of Germany, and I think that could have an effect overall on the strength of the euro within the European Union. Now, as we scroll down then maybe to some numbers that have not come in yet, we've got Great Britain coming up with a rate decision expected to lower their interest rate. Again, maybe that's a competitive advantage that interest rates are getting lowered around the world, but the U.S. FOMC committee, and in particular Jerome Powell, continues to insist on not lowering the interest rate down in the U.S. So this could create maybe some weakness in the pound against the U.S. dollar or other currencies as the rate is expected to be cut. Now we can take a look and see, has that been the case in the past with rate decisions? What we see is if the rate decision comes in matching the forecast, it's kind of a mixed bag. We have 71% downward movement and 29% up, but look how small the downward movement was. It's almost minimal to non-existent downward movement on two of them, and two of them very small movement. Only one was significant down. So this percentage is misleading. And so I don't see any significant pip movement advantage in terms of the size of the upward movement and the size of the downward movement with saying I would trade one direction or another if this comes in matching the forecast. And if we want to see, well, what if it came in above the forecast? Well, it just hasn't happened. It usually doesn't. What if it comes in below the forecast? Again, it hasn't happened in the past year, and usually that's not what happens. Usually they're pretty dead on with what they anticipate the rate decision to be and then what it ends up being. Now, with that said, if there was a surprise here and the rate was not cut and stayed, let's say, at 4.25, then probably that would lead to a rapid strengthening of the pound against other currencies, because the higher the interest rate, the stronger the currency strength tends to be, at least in the short term with rate decisions. And the opposite, if they lower it more than expected, say rather than lowering it to 4%, it goes to 3.75%, maybe they do a 50 basis point cut instead of 25, then probably you'd see a rapid weakening of the pound against other currencies. In a general sense, that's what we tend to anticipate because lower interest rates makes the currency easier to get, cheaper to get a hold of, and so then devalues that currency at least temporarily many times anyways, with rate decisions that might come in lower than expected. But you see, we don't even have data on that because it almost doesn't happen most of the time anyways. So this is a hard one to trade on because the rate cut decision already is expected to be as it is, and a lot of the strengthening or weakening that would be related to that rate cut, since it's anticipated it will occur, those movements on the charts may have largely occurred before the rate decision actually comes in. And so mostly you'd get big movements if it's a surprise and comes in higher or lower than expected. So this is one, when you look at the data, that it kind of convinces me I probably don't want to trade on this. A lot of small movements, looks unpredictable with one large movement up and one large movement down. So a lot of times when you use this tool, it can not only show you what you want to trade on, but sometimes it shows you announcements that maybe you're not so interested in trading on, okay? Now, if we go down to a different example, initial jobless claims, for example, it's listed as a high-level announcement. The expectation is 220,000 initial jobless claims. That's jobless claims, meaning the higher this number is, that's bad news. And the lower this number is, that's good news. And so if we look at this volatility tool, what we can do is, against whichever currency pairing we want that involves the US dollar, we can look at the different time frames after these past announcements and qualify this. Now it's 50-50 because I have all events. But if I say, what if the initial jobless claims come in above forecast, meaning bad news? More people filing for initial jobless claims, meaning more people have lost work. If that comes in that way with bad news above forecast, we see 67% of the time upward movement. Okay, 2 out of 3 times that happened, upward movement. And the upward movement on average was much larger than the one that went down. Okay, we had one that went down slightly, one that went up slightly, and the other went rocketing upward. So if you add together these 2 green upward movements, they're probably 6-7 times as much upward pip movement as downward when this came in above forecast. Okay, and so this is what I like to see when I look at the data, is not only is the percentage better in one direction when the announcement comes in a certain way, but also the size of the movements, the percentage of the pip movement is largely in that direction too. If you remember the prior announcement we looked at with the rate decision, okay, it was 71% down, but the pips didn't add up to 71% of the pip movement. Here we've got 67, 2/3 of the time up when this comes in above forecast, and greater than 2/3, maybe 80% of the pip movement is up. Okay, so I would probably be watching this announcement, and if it comes in higher than expected with these initial jobless claims, I would try in the first 5 minutes to see if I can catch this movement while it hasn't moved very far. And you see in the first 5 minutes, the average movement was 17 pips. And you know, it doesn't take 5 minutes to place a trade. In the first 5 seconds, you can see the data come in, and perhaps you catch a spike down if you expect it to go up to get a better data or a better entry point based on the data that we saw. Okay, and so then we see after 30 minutes, more upward movement. After 4 hours, further upward movement with only one pulling back slightly. So a short stop loss and a longer take profit. With these 3, you'd have had a much better profitability than loss. Okay, now what if it comes in the other way, below forecast? Okay, we see the opposite movement. We see more red downward than upward. Now the percentage isn't that great, 56% to 44. It's almost 50-50. But I do see probably twice as much red in downward movement with these announcements than I see up. Okay, but I would feel a little stronger trading if this comes in above forecast, trying to find a low point for the upward movements that have occurred in the past to see if that potentially would be maybe an easy win. Okay, so you don't win with each trade with this type of trading, but we call it data-driven trading. You're going to make decisions more robotically based on how the announcement numbers come in and what did the past data show percentage-wise and pip-wise could be expected perhaps with the movement after the numbers come in. Okay, and so this can just be one of a list of strategies that you use to diversify your trading techniques. And, you might find that certain announcements you have better success with than others, and they're repetitive. We have initial jobless claims, continuing jobless claims. We have PPI data, CPI data, GDP data, all kinds of information coming in on the economic calendar each day, each week, and it's repetitive. You see the same announcements again and again and again. And so I would say try each announcement that you think looks good to trade on from the data. Try them 10, 15 times each with limited risk on each trade. And then you'll get enough data points to say, okay, which ones am I most successful with? And then maybe there's 3 or 4 announcements that you find fit your schedule the best and that you've had the best results with. And then you use those moving forward as a longer term part of your trading strategies. And we can look ahead to tomorrow. I saw a couple announcements that look pretty solid in terms of the data. Household spending out of Japan, it's a high level announcement. It's expected to drop. And you can take a look at the statistics on this. If household spending comes in below forecast, you've got 2/3 of the time upward movement on the USD JPY. Okay, pretty significant movement with one going down. So again, a short stop, a longer take profit. You could, depending on entry point in that first 5 minutes, maybe have some good profitability. Looks like average range movement, only 5 pips in the first 5 minutes. And then after 4 hours, 47 pips. Okay, so looks like 2 out of 3 here, you'd have been pretty profitable with one of them even dipping down in that first 5 minutes to give you a nice entry point before it went up about 35 or 30 pips. Okay, now what if it comes in above forecast? The opposite. Okay, you can see a direct relationship here. Not only are the downward movements more numerous, but they're larger. So if household spending comes in above forecast, higher than expected, then we see a lot more downward movement as the yen strengthens with that positive news. And so 75% of the time down with an average range movement of 54 pips after 4 hours. Okay, and again, you can look in the first 5 minutes and see there was a lot more upward movement in the first 5 minutes, and a number of these barely dropped at all. But then after 4 hours, you see the shift and the movement that kind of makes sense when household spending was better than expected. The yen actually strengthened. Okay, so this is pretty powerful data when you look at some of these announcements, and then the key is, are you available at the time that this announcement comes in to see the numbers come in and then to react with a trade that makes sense. And then we can go later in the day. The Canadian announcements might fit, depending where you live, your schedule better. We can look at employment and see what's going on with full-time employment in Canada. The expectation is a drop. We can see from 13,500, it's expected to drop to 3,000. So it looks like they're expecting bad news. And as we take a look here, if this announcement comes in above forecast, okay, 56% of the time the USD strengthened if this came in above forecast, which is interesting because above forecast would be positive news, but yet the USD strengthened against the Canadian when it had positive news. So this is something that I would think twice on, not only because it's 50-50 with the numbers almost, but because the movement seems to be in a direction that logically might not make sense in your head. Now, if I look at the below forecast, if it comes in below forecast, now that makes sense to me. And look, it's 100% up with the USD rising against a weakening Canadian when there's bad news on the Canadian dollar. So I would preferentially probably watch this announcement, hoping that this number would come in below forecast, because in the past we had over 89 pip average range movement, with 100% of these ending up significantly, as much as 86, 87 pips on a couple of these. That was a pretty predictable move when the data came in worse than expected, and then the Canadian weakened against the US dollar. So this is the direction I'd be looking for: stronger percent data, stronger movement as well. The above forecast was close to 50-50 and doesn't make much sense to me. So I would probably leave that alone if it came in above forecast, and I'd be looking at the below forecast if it did come in that way, to try and find an entry point in that first 5 minutes to see if maybe I can get in. You see one went down, the others went up very little, and then after 4 hours you have the full movements to take a better look at the longer movement over those hours. So some real opportunities here with these announcements today, tomorrow, to do a bit of announcement trading, depending on your schedule and if you're available to watch these as they come in. Again, you're not going to win each trade, but if you can win in percentages that fit what it looks like you could have won in the past with that data, then 65, 70% wins could pay out quite well. Okay, and even if you're 50-50, you see the direction upward or downward. If that's the direction you're trading, maybe it's larger than what you'd have to risk. And so even at 50% success, you might actually be profitable if the take profits are taking in more than you're risking with your stop loss. So any questions, comments before we move maybe to another section with some other fundamental news? I'll pause just for a moment. Okay, and I'll keep my eye for any questions that might pop up as we're going along. Okay, so where else can we look for fundamental news? Within our web trader and app, we can go to the Market Buzz, which is a nice feature to see what's the most recent news that already came in. Okay, a bit different than waiting on an economic announcement. Now, the way this is set up, the bigger the circles in the pictogram, the more that particular trading instrument is trending online. Okay, so we see Apple is a big one. So you might click and see, okay, well, what's going on with Apple here? And right away we see a trend analysis. Price may fall 4% or so. So if you click on that, you can get the technical signal. This shows where the support level is below, where this is expected maybe to pull down to. So maybe you were thinking about buying on Apple. So you see that technical signal, and maybe you say, okay, perhaps I put a pending order down at the support level where maybe in the shorter term it's expected to pull down. Maybe I put a pending order down in this support level to buy if I feel more bullish about Apple than maybe this signal does. But also a key part of this area is you can see, well, what's the most recent news? Maybe there's a reason why, fundamentally, why Apple's expected to drop, okay, from the technical signal. And the first thing you see is talk about tariffs. Trump tariffs live updates. Trump boasts of tariff billions, vows to punish China for Russian oil. Okay, I don't think that directly affects Apple, but we did lead off the webinar talking about the fact that 50% tariffs were slapped on India, and a lot of products for Apple are manufactured and sent to the US from India. Now they do have an exemption for a number of their products, but I think that maybe is creating some tension, some fears that maybe India retaliates with tariffs back, and there's fear that then there'll be more retaliation back at India. This has happened with some of the negotiations already, with Canada, for example. And so I think maybe this technical signal aligns with some of this fear about tariffs, okay? Even though there's some exemptions for Apple built into those tariffs with regards to India and the tariffs that are there. We see Apple pledges 100 billion additional investment in US. Okay, why do you think they did that? You know, the next part of that headline, likely impact on India. Okay, so because of the tariff threats, then companies like Apple are saying, okay, in order to avoid tariffs on our products that we make in India, when they're shipped to the US, we'll pledge 100 billion of more investment in the US. And then Trump says, okay, we exempt you from the tariffs then. And that's kind of the way this is going in the negotiations. And you can read the whole story with this tool. So here's a summary of it, or you can read, which I recommend, read the actual article, and you can get a feel for how does this affect what you think Apple's stock price might do when the market opens, because this is the most recent news. This just came out overnight. It's new information. The U.S. market hasn't opened yet since this information came. So this is a good spot to find the most recent fundamental news on whatever it is you're interested in trading on, and then you'll be more fully informed when the U.S. market opens to decide, do I trust this technical signal or not? Okay. And that's the way I would recommend you operate with using these technical signals. Check the most recent fundamental news and see if that helps you feel more confident about that signal or not. If it works in the same direction as the signal, then maybe you follow it once the market opens, in this case, in the US, to be able to trade on Apple. If the news that you're reading is the opposite, if it was a bunch of good news about Apple, then maybe you'd say, you know what, I'm not going to follow that signal, and maybe I'll just, if it does pull down, have a pending order on the support level to buy, if you thought the news was more positive than negative. Okay, and so my point here isn't to read all the articles with you and decide for you if you think the news is positive or negative, but to show you that this is where you find that information, and then you can make that decision. And really, it doesn't matter which category you trade in, the cryptocurrencies, the commodities, you can use this tool for everything that we offer. Okay, I know there's been a lot of talk about NVIDIA as well, and you might real quick see that NVIDIA actually has the opposite technical signal. While Apple's expected to drop, look, NVIDIA is expected to go up 10%. So it's interesting to look at the difference between two major tech companies with opposite technical signals being drawn out. And then if the articles you read, once again, if they make you feel like, hey, I think fundamentally NVIDIA should rise as well, then maybe this is a signal you follow. Okay, Wall Street eyes blowout second quarter for NVIDIA. Well, that sounds pretty positive. The expectation is the second quarter numbers for NVIDIA are going to be really, really strong. So you can read that article and see if you agree with them. And this type of article explains to me why you might see this type of trend setting up on the chart, where it's broken through the resistance levels, has a nice support level below, and it's expected to bounce. Why would it be expected to bounce off the support level drawn in this signal? There's a lot of positive momentum with headlines like this, expectation of really good numbers. Okay, so then all you have left to do, if you've made up your mind, is when the market opens for NVIDIA, is see if you like the entry point. Is the trend confirming that direction, etc., and then make your trade with a measured risk and decent potential profit with your take profit setup. Okay. Now, we can also act without waiting for announcements to come out based on announcements that already occurred. Remember, we looked and we saw that out of Germany, there were a couple data points that were pretty bad. Industrial production way lower than expected, showing a big decrease month over month, and the trade balance wasn't as positive as expected. Okay, some pretty big negatives there with the announcements out of Germany, and so it could affect the euro. If we look at something like the euro USD setup, first of all, we can see if there's a technical signal, and there is. So the signal says buy on euro USD. From a technical perspective, it looks like that's the case because the euro indeed weakened with that data today. So the fundamental news says sell, and indeed the euro's been dropping today. Now, do I trust a technical buy signal in a downtrend with news that's working against that? I don't. So this particular support level, I don't trust. Why don't I trust it? There's been bad news times 2 out of Germany, which typically would be bearish on the euro, and that's exactly what we see in this trend movement right now, is downward movement on the euro against the USD. Okay, ever since that data came out, really look for the last 4 hours as this candle tipped to this one, dropping, 3 straight pretty significant red candles. Okay, so there's a reason why that's happening, and we already anticipated it before we looked at the chart. How did we anticipate that probably the euro is dropping against the USD for the past few hours? Because we looked at the fundamental news announcements, and those announcements came out several hours ago. So you easily could have shorted the euro based on that data that came out. It was clearly negative for the German economy, and look how easy of a take profit that would have been, straight down for the last 3 hours. Okay, this is the power of fundamental news, the power to avoid a technical signal that isn't taking into account the fundamental news and to make up your own decision. Okay, now we are getting later in the afternoon, getting into the afternoon, and there will be some announcements out of the US soon. So acting on those announcements from the European Union, from specifically Germany, the negative effect on the strength of the euro, it might be a bit late now, especially if it's paired against the USD, because now we have new information coming out of the US that could make that movement reverse. Okay, but you see the power of what you could have done with this particular pairing had you paid attention to those announcements that came in a few hours ago. And if we looked at those announcements in the volatility tool, like we looked at the upcoming announcements, we'd see that typically when that data comes in worse than expected, the euro drops a certain percent of the time against the USD. It was there, okay, if you go back and look at it. And so depending on what time of day you're available, that economic calendar could have already brought you a nice win today. When you saw the data come in worse than expected in Germany, certainly the data would have pointed in that volatility tool that more times than not, the euro weakens against the USD when that type of data comes in, and here you would have been with an easy win. Okay, that data looks back about 4 hours. Well, we're getting to that time frame now already after the announcement, so it's a little late to act on those, but you can see what the result would have been. Now, let's say that you decide, because this movement already occurred and there's new information coming out of the US, that maybe you think this support level will hold. Okay, I'm not suggesting that you trust this signal, because we don't know what the next fundamental news will be. We already know the current fundamental news is working against buying on this signal. But let's just, for the sake of risk management, pretend we were going to buy on this signal, and here's the support level. So we would put our stop loss below that support level, which is below 116.45, with our take profit above 117. Okay, so buy, stop loss 116.45. That was where that support level was. So maybe I put it at 116.40. Okay, and the take profit zone started at 117 and up. So I'll go ahead and leave that at 117. So where's my take profit? My take profit, if I draw it here, is 117. And look at that. That's the resistance level. Okay, that's where it hit earlier today and dropped. So here's the take profit zone, and it came down. So if it does come back there, it will likely find resistance at that spot. So it makes sense, without having to break that high, that we could take profit, because it might find resistance and come back down again if it does go up there. So maybe just before 117 would make sense to take profit from that spot. So 116, let's say 95. And what I'm looking at then is potential profit around 4,600, potential loss around 3,600. So a little better than 1-to-1 ratio, potential profit to potential loss, if I put my stop loss down at 116.40. Okay, and so let's find 116.40, which is right there. Okay, you see my take profit is below this support level. Okay, there's the support level where it was sitting and staying up in rows. So if I lose, it has to break this support level to hit my stop loss. And if I win, it doesn't have to break today's high for me to hit my take profit. Okay, so as we set up trades, we're looking at the technical setup, and that was provided for you in the signal. Okay, this support level and this resistance level was provided in the signal as a potential spot to put stop loss and take profit. Okay, so I'm set up with that signal to go ahead and buy with the buy signal if I wanted to, but now I have to look at my risk management. Okay, maybe I like the ratio of potential profit to loss with this setup, and the setup dictated where my take profit and stop loss would be, but now I need to adjust my trade size then, because maybe I only want to risk like 1% or something like that on my account per trade. So I need to adjust my trade size to be commensurate with that. So with a one lot trade, I'm risking 238. If I'm okay risking say 600 per trade, then I can do a bit more than that. Maybe I do 2.6 lots. And now I see I'm risking just over 600, which is right about 1% of my account. And maybe you are willing to risk 0.5% or 2%, whatever that is per trade. At least you know what it is, and you can manage your risk in a way that makes sense for you within the trade setup that you have. Okay, and so if I like the risk management setup, I like my support level. Maybe I think with the US announcement coming soon, this drop of the euro against the USD will be reversed potentially, and so maybe I choose to trust that signal and buy, and then away I go. Now, like I said, I don't really like that signal because the news that came in is working against it already. So I probably would avoid doing this, but if I was, here's the easy way to set up your risk management before you place that trade. Okay. All right, any last questions, comments before we end the session? I'll pause just for a moment. Okay, everybody was pretty quiet today, but I see we have a good crowd in attendance, so it must have been informative enough. I didn't see anyone dropping out, so thank you for attending. Again, if you do have any input you want to give, request certain instruments to look at, charts, please do that. You can be interactive within the session and request to see certain charts and talk about certain topics if you wish as well, okay? All right, everybody, thank you for joining. Good luck with your trading the rest of the week, and we'll be back at it next week. Bye for now.